Okay, guys, we're going to go to Ask Scruff. Now, this is a question about fibs. So if we flick this over and I'll drag the question in so that you can see it. Now, it's a little salute out to Chris, or at least it will be when I fix the thing. So a little salute to you, kid. Sometimes find it tricky to find a correct fib placement. So some are obvious to me and some not so much. You've kind of answered your own question with that statement, and I'll explain it. Do you think there's any mileage in having a blank chart and trying fibs in various areas to see which fits the price best? Had some good reactions and then use the fibs on my trading chart. Is there a better way of selecting? Right, okay. What you've got to remember with a fib is a fib works from two fixed points. The stronger the drive, the more reaction it's going to have. So that reaction is taking profits, stops being hit, people on opposing positions, okay? And it'll naturally create a retracement because there's what's called a flush out. And what that means is that's the stops getting hit, people taking profits, etc. Okay. Now, when you're looking at said chart that we have in front of us right now, there are also other elements that you need in this, okay? And those other elements are key levels. A key level like this, if I take off the indicators, will highlight certain areas of the chart that you're interested in, good areas of the chart, but they are absolute. And what that means is they're being tested in the past, which means they'll be retested in the future, okay? A fib is hypothetical, so therefore it's not very good. It's good at reinforcing these, but it's not very good on its own. Let me just give you an example of this. So if I drop this out, you want to be on approximately a 15-minute chart minimum, and then you take it into an hour and above. Now, what's wrong with this? Let me refresh that screen. Ah, that's better. Okay, so this here would be a strong directional drive. We can see that clearly. This is a strong directional drive. Now, there are two different areas. This is what's called an overextended candle, so you can easily point them out. And as long as it doesn't break the top, it will naturally come down into retracement points as such. So just get hold of a Fibonacci tool. You can see it started down there, and that particular candle got up as high as here. All right. So that whole candle is an overextended. What did it do? It jostled along the 23, jostled along the 38, and then finally came to the 50. What did it do when it broke the 50? It jostled along the 61, jostled along the 76, finally stopped where it came from. And then what it did was it continued down into the expansion points. So that one candle mapped part of this entire move. Now, this particular move, again, if you put the retracement on, started approximately here, and then you could see that it got to its lowest point down here, okay? Now, there's three areas you could have pointed. You could have had that one, and that one. So if you start with the first one, that one locked in on the 23, so therefore that move would lock at this point. Goes into consolidation or compression, and then repeats the cycle. Where did it stall again? Well, bang on that 23, stopped. Bang on the 38, stopped. And then jostled around the 50, rejected it slightly, back to 38. And if you look, it bounced off the key levels as well, went back. If I move this across, you'll see it stopped on that 50 again, stopped on the 61 again, back up to 76, jostled around, and then it's collapsed. So the fibs are a complement to the key levels. rather than a replacement. But your key levels give you the trading arena. The fibs just validate that arena. So personally, no, I wouldn't just use fibs. They have that place, but like I say, they're a complement to the trade as opposed to the trade. Okay, hope that helps. Catch you soon.